Hello everyone, welcome to the market opening bell for Tuesday, May 19th, your 10-minute guide to the stock market. US inflation heated up combined with discussions between the US and Israel about restarting military action against Iran, escalating geopolitical tensions. Major Asia-Pacific stock markets were broadly under pressure. The Hang Seng Index opened 123 points lower, with the decline accelerating during the session. It fell as much as 457 points intraday, hitting a low of 25,505 points and closed at 25,675 points, down 287 points or 1.1%. Total market turnover was 292.7 billion Hong Kong dollars. The Hang Seng Tech Index closed at 4,844 points, down 96 points or about 1.95%. The Share Index closed at 8,597 points, down 93 points or 1.1%. Southbound funds net sold $7.876 billion of Hong Kong stocks. Among them, net buying included China Life at 1.345 billion, Li Auto 764 million, Tencent 548 million, SMIC 218 million. Net selling included Troika Fund at 5.302 billion, Alibaba 1.342 billion, PopMart 403 million, Hong Semiconductor 120 million. According to statistics, Southbound funds have net sold Alibaba for 4 consecutive days, totaling $6.903 billion, and have net bought Tencent for 3 consecutive days, totaling $1.195 billion. Technically, the Hang Seng Index hit a low of 25,505 points, partially filling the upward gap from April 8th. This gap spans 414 points, ranging from 25,254 to 25,668 points. The Hang Seng Index has so far held above the 25,500 level. The key question now is whether it can reclaim the 50-day moving average at 25,763 points. The next resistance above stands at 25,950 points. Mainland China's troika data all came in weaker than expected. The Shanghai Composite Index fell 3 points or 0.29% for the day, closing at 4,131 points. The Shenzhen Component Index fell 31 points or 0.2%, closing at 15,530 points. The Chinex Index fell 14 points or 0.4%, closing at 3,914 points. Combined turnover in Shanghai and Shenzhen was 2.9 trillion yuan. The renminbi central parity rate against the US dollar was 6.8435, down 20 pips from the previous day. China's National Bureau of Statistics reported that industrial added value for enterprises above designated size in April grew 4.1% year-on-year, below market expectations of 6% and the lowest since July 2023. Previous was 5.7%. Total retail sales of consumer goods rose only 0.2% year-on-year, missing expectations of 2% and the lowest since December 2022. Previous was 1.7%. Fixed asset investment in the first 4 months of the year fell 1.6% year-on-year, also below expectations. Previous was 1.7%. Real estate development investment fell 13.7% year-on-year, with residential investment down 13.1% versus expected down 11.5%. New commercial housing sales area in the first 4 months dropped 10.2% year-on-year, narrowing the decline by 0.2 percentage points from January to March, with residential sales area down 12.2%. New commercial housing sales amounted to 2.3 trillion yuan, down 14.6%, narrowing the decline by 2.1 percentage points, with residential sales down 15.7%. As of end April, the area of unsold commercial housing fell 0.5% year-on-year, with properties unsold for less than 3 years down 2.6%. The National Urban Surveyed unemployment rate in April was 5.2%, down 0.2 percentage points from March, versus market expectation of 5.3%. The National Bureau of Statistics noted that the external environment is complex and volatile. Domestic supply remains stronger than demand. Some enterprises face operational difficulties, and the foundation for stable economic improvement still needs consolidation. The three major Chinese telecom operators bucked the market trend. Following China Mobile and China Unicom, China Telecom announced on the 17th the launch of a series of trial commercial token packages, marking the official transition of operators' billing models from the traditional data era into AI token era. China Mobile Beijing launched computing power token packages for individual users, built by token and paid on demand. China Unicom has launched computing power integrated subscription packages, and Shanghai Unicom released the FDE Puzhi plan, introducing a new token operation paradigm. China Telecom offered developers and SMEs 3 tiers of token plans, plus optional broadband uplink, speed-up, and security protection packages. Token plans start from 39.9 yuan per month with 15 million tokens. For individual and family customers, token plans start from 9.9 yuan per month with 10 million tokens. According to the latest 225 annual reports of the three operators, traditional mobile ARPU is generally peaking or declining. Example, China Mobile's 2025 mobile ARPU fell 3.5% year-on-year to 46.8 yuan. The new token packages feature extremely low entry barriers. Example, individual plans from 9.9 yuan per month, or flexible single packs of 250,000 to 400,000 tokens for 1 yuan, which can quickly attract a large number of individual and micro enterprise users trying AI. These revenues will be directly combined with mobile phone bills, providing direct hedging and uplift to declining traditional personal communications ARPU. For developers and SMEs, packages go up to 299.9 yuan per month, including 150 million tokens. When enterprises call large models for API development or office automation, they often also purchase the operator's bundled broadband uplink, speed up, and security protection packages. This token plus connectivity plus security integrated strategy can significantly increase average revenue per BN government and enterprise customer in the short term. The three operators have been heavily tilting their tens of billions in capex toward computing power and AI data centers in recent years. The popularization of token packages will rapidly increase utilization of this idle intelligent computing power, accelerate cost recovery and depreciation of earlier heavy investments, and improve medium to long-term net profit margins. Hong Kong China Travel saw sharp share price movement, rising more than 40% at one point and triggering the market volatility mechanism intraday. The company announced it will invest 102 million yuan to establish a joint venture with local state-owned assets to jointly develop the Heidushan Scenic Area in Qinghai Province. Heidushan previously existed mainly as a wild attraction and internet-famous check-in spot on platforms like Xiaohongshu, lacking systematic commercial development. The scenic area is currently in the initial opening phase and received 20,874 visitors during the 5-day May 1st Golden Week in 2026. The company expects the upgraded new investment format to be fully completed and officially opened in 2028. Earlier, the company mentioned that the Jilin Songhua Lake International Resort, acquired in October 2025, and China Travel Beijing Ice and snow sports development, received 1 million visitors in the 2025-26 winter peak season, up about 9% year-on-year, contributing approximately 170 million yuan in revenue and 57 million yuan in operating profit to the group in the first 4 months of this year. Automotive stocks faced significant selling pressure. Li Auto fell 14.2%. Investment banks noted that the upgraded Li L9 is not a game changer. Leap Motor fell 7.8%. Its first quarter results showed notable revenue growth without profit growth and severe polarization between domestic and overseas demand. Although sales ranked at the top and overseas exports hit record highs due to product mix adjustments, Q1 net loss widened again to 390 million yuan versus 130 million yuan loss in the same period of 2025 and 360 million profit in Q4 2025. Q1 revenue grew 8%, significantly lacking the 25.8% sales volume growth, mainly because of the launch of lower-priced new B platform models, which boosted volume but diluted ASP. High-margin technology licensing strategic cooperation revenue also shrank temporarily in Q1, while cost of sales grew faster than revenue. R&D expenses continued to rise, reaching 1.04 billion yuan, up 30% year-on-year. With the delivery of higher-priced new models such as D19 and economies of scale, gross margin is expected to rebound to 12 to 13% in Q2. Management maintained the full-year 2026 sales target of 1 million vehicles, but acknowledged risks to the 5 billion yuan full-year net profit margin. The company confirmed it will launch a higher-positioned independent second brand above 300,000 yuan by the end of 2026 or early 2027 at the latest, aiming for brand upward movement to expand profit margins. Baidu Group releases unaudited Q1 2026 financial results. The report highlighted a landmark structural shift. Revenue from AI-driven businesses exceeded half of core revenue for the first time. AI cloud infrastructure entered a full explosion phase, while traditional advertising remained under pressure, showing characteristics of structural gear shifting with short-term profit adjustment. Q1 revenue was 32.1 billion yuan, down 2% quarter-on-quarter, but beating consensus expectations of 31.5 billion yuan. Core AI revenue reached 13.6 billion yuan, up 52% year-on-year, surpassing half of Baidu's general businesses for the first time. iQIYI revenue was 6.2 billion yuan, down 8% quarter-on-quarter, with continued content cost optimization, but some contraction on the revenue side. Net profit attributable to Baidu was 3.4 billion yuan, with a net margin of 11% and diluted earnings per share of 8.76 yuan. Non-GAAP net profit attributable to Baidu was 4.3 billion yuan, down 33% year-on-year, mainly due to weak seasonal advertising and high AI capex depreciation. Non-GAAP net margin was 14%, with non-GAAP diluted earnings per share of 12.06 yuan. Adjusted EBITDA was 6 billion yuan, with an adjusted EBITDA margin of 19%. The autonomous ride-hailing service Apollo Go delivered 3.2 million fully driverless orders in Q1, up more than 120% year-on-year, and was ranked second globally in the automotive category by Fast Company for innovation. According to incomplete statistics, major listed gold jewelry brands saw a sharp reduction in stores in Q1 this year. Chow Tai Fook net closed 128 stores in mainland China, with same-store sales plunging 30.9%. It proactively closed nearly 900 stores in 2025. Lao Feng Xiang net closed 185 franchise stores, with both revenue and net profit declining. Chow Tai Sung net closed 286 stores in the quarter, with revenue down 26.9% year-on-year. Yu Yuan shares net closed 192 stores for its Lao Miao and Ya Yi brands. China Gold net closed 203 stores, proactively shrinking inefficient franchise outlets. U.S. President Trump stated that at the request of multiple world leaders engaged in Middle East negotiations with Tehran, he has agreed to postpone the originally scheduled large-scale attack on Iran set for Tuesday. The three major U.S. stock indexes show mixed performance, but all recover from their intraday lows. The fear gauge VIX index fell 0.61 points or 3.3% to 17.82. The Nasdaq fell 0.5% to 26,090 points. The S&P 500 slipped less than 0.1% to 7,403 points, and the Dow Jones rose 0.3% to 49,686 points. Technology and industrial sectors led the declines at the close, while energy, financials, and consumer staples posted relatively stronger performances. The Nasdaq China Golden Dragon Index, which tracks Chinese stocks listed in the U.S., fell 48 points or 0.7% to close at 6,790 points. Nvidia is scheduled to report its quarterly results after the market closed on Wednesday. Its share price fell 1.3%, making it the second worst performer in the Dow Jones Industrial Average. Several retail giants are also set to release earnings this week, including Walmart, Home Depot, Lowe's, and Target. Home Depot and Lowe's may lower their full-year guidance as home improvement retailers continue to be dragged by weak consumer sentiment. Tesla closed down 2.9% according to reports. Tesla has officially abandoned its plan to build a factory in India, despite the Indian government offering specially tailored incentive policies for the electric vehicle sector. Years of negotiations ultimately collapsed. Separately, Tesla raised prices for several Model Y variants in the United States. The Model Y Premium all-wheel drive increased by $1,000 to $49,990. The Model Y Premium rear-wheel drive also rose by $1,000 to $45,990, and the Model Y Performance all-wheel drive was hiked by $500 to $57,990. Apple closed down 0.8%. The company announced on Monday that it will officially kick off its Global Developers Conference on June 8th, with a special launch event to be held the same day at Apple Park. On the news fronts, NextEra Energy and Dominion Energy have agreed to an all-stock merger that will create the world's largest regulated electric utility company. NextEra Energy's share price fell 4.6%, while Dominion's surged 9.4%, making it the second biggest gainer in the S&P 500. In economic data, the National Association of Home Builders May Housing Market Index rose to 37, better than the expected 34. The New York Fed's May Services Business Activity Index climbed to minus 5.8 from minus 14 in April, the highest level since January 2025, indicating that the pace of contraction has slowed. Our stock pick today is Zhaowei Machinery and Electronics, stock code 2692. Zhaowei Machinery and Electronics specializes in the R&D, production, and sales of miniature, transmission, and drive systems. The company provides one-stop miniature drive system solutions for various clients. Its miniature, transmission, and drive systems feature high precision, compact size, and low noise, enabling them to meet the application needs of downstream industries. The products are widely used in fields such as intelligent vehicles, consumer and medical technology, advanced industrial and intelligent manufacturing, robotics, and more. The group has established a transmission plus motor plus electronic control collaborative innovation system under the 1 plus 1 plus 1 strategy. Guided by this strategy, it achieves deep integration of miniature transmission systems, miniature motor system, and electronic control systems, building a full chain competitive advantage that spans core components to intelligent integrated solutions. In the field of miniature transmission, the group has independently developed gear components and miniature reducer series products which form an important part of the 1 plus 1 plus 1 innovation strategy. Leveraging advanced mold forming and machining processes, the group can independently produce core gear components, including plastic injection molded gears, powder metallurgy gears, metal power injection molding gears, and metal cut gears. Its great precision reaches industry-leading levels. The group's planetary reducers are widely used in fields with strict requirements for high precision and miniaturization, such as medical equipment, embodied robots, and high-end manufacturing. In the miniature motor field, the system serves as the power core for various miniature drive solutions and must deliver high efficiency, compact size, and excellent torque performance. The group has independently developed multiple motor product series, including brushed DC motors, brushless DC motors, and coreless cup motors. These motors offer high power density, low cocking torque, strong overload capacity, and good heat dissipation performance. In the motor control field, the group has independently developed high-precision miniature electronic control systems. These drive modules adopt a stable, reliable, and modular design suitable for a wide range of application scenarios. They meet high performance standards and can be customized according to the specific requirements of different drive components. The group is also equipped with industry-leading Siemens placement lines and consistently maintains strict quality control standards. The group is steadily advancing its global layout. In July 2025, the Suzhou Zhaowei Drive Industrial Park factory and production equipment successfully passed system certification and customer on-site audits. It has officially commenced independent production and generated product sales revenue, becoming an important production and business foothold for the group in the East China region. On the overseas front, Zhaowei Thailand is under preparation. Together with Zhaowei Germany and Zhaowei USA, it will support the group's expansion into international markets and deepen its global presence. Investment suggestion. Recommendation buying price $72. Target price $80. Stop loss $68. I do not hold the above stock.